Hi, my name is Christine Jeffers and this is Mary Bell Neighbor. We are going to talk about Proposition 60 and going over some of the common questions that we usually get. So Mary, can you tell us a little bit about Proposition 60? What is it?
Absolutely. Proposition 60 is your ability as a homeowner in your own personal residence. If you're 55 years old, it gives you the ability to buy another property equal to or lesser than the value of your current property that you're selling. And it allows you to transfer your tax base within the county that you live in the state of California.
So what can Proposition 60 mean to you on your property taxes?
The great thing about Proposition 60 is if you are 55 years old and you're selling your personal residence because you want to move to a different location or downsize, as long as you buy equal to or less than the value of the property you're selling, you can transfer your tax base. So in my example I'm going to give you now, someone's owned their property for many years in Lafayette. Their property is now worth $1,050,000. Their property taxes are calculated way back on when they bought it. So today they pay approximately $150 a month in property taxes. If they were to sell their home and buy exactly the same price home, $1,050,000, their property taxes would be almost $1,100 a month, not $150 a month. And so they're saving a huge amount, up to, could be more than, but up to $12,000 a year in savings. If they sell their $1,050,000 property and they downsize to say $600,000, their payments would be $150 a month because they're transferring their tax base. Again, a huge savings. Could save them up to $500 a month over the course of a year. Could be a savings of $6,000. So it's a huge advantage, especially in the state of California when you transfer within your same county.
That is amazing information. Can you imagine the people who have not taken advantage of that didn't know? So thank you for sharing that.
Absolutely.
So how does someone qualify for Proposition 60?
Great question, but the basics are one of you, either you as an owner or your spouse, has to be 55 years old. So one of you has to be 55. It has to be your primary residence. And when you sell it, you have to buy another primary residence. You also must close escrow on the property that you're going to buy within 2 years of the sale of your first original property that you owned.
The next common question that we usually get is this: if the current full cash value of my replacement dwelling slightly exceeds the full market value of my original property, can I still receive a partial benefit?
So let's say you sell a property for $1,050,000 and you go to buy your next property to try to transfer your tax base and you pay $1,055,000. The answer is no. You can get no partial benefit, no benefit at all. It has to be equal to or less than in value. There are, by the way, a couple of small exceptions, and if you need that information, don't hesitate to call us. We'll give you that information as well.
Okay, so the next question we usually get: can you give your property to a child and still receive the Prop 60 benefit when they purchase a replacement property?
Let's say I decide to give my property to my son, and then I still want to buy a replacement property, and I want to have the advantage of Proposition 60 tax base. The answer is no. If you give your original property to someone, you cannot use the tax base.
Can you take advantage of Proposition 60 more than once?
So let's say you have sold your personal residence and used Proposition 60, and some years later you decide to try to do it again. The answer is no. It's a once-in-a-lifetime opportunity. You may only do it once. So my advice to you is, if you're thinking about getting married, make sure one of the prerequisite questions of your soon-to-be spouse is, have they ever used Prop 60? Because if they have and you marry them, you no longer can use your Prop 60.
Can someone transfer their tax base under Prop 60 from one county to another county in California?
Some of the counties do allow transfer from a separate county into their county. That's called Proposition 90. And so, for instance, in the state of California, and in Contra Costa County, you cannot transfer your tax base into Contra Costa from another county. Alameda County, however, does allow you to transfer your tax base. And there are other counties in the state of California that allow you to transfer your tax base in. If you have any questions about those counties and what they are, don't hesitate to get a hold of us and we'll let you know.
Mary, thank you so much for your time. For those who don't know Mary, she has been in the business over 35 years. She is a broker for Intero Real Estate Services. She's on my team. She's a great resource for our clients. And if you have any questions, please feel free to call us. Mary and I hope this video has been informative and it provided helpful information that will benefit you now or in the future. Please share it with your friends and families. Before you go, here's a little information about us. We have a dedicated team of professionals with an absolute commitment to the client's best interests. Our broker, Mary Bell Neighbor, has over 35 years of experience in real estate, so you have access to a wealth of knowledge and resources to address any questions or concerns you have. When you work with us, we will review your needs and discuss what is important to you and provide solutions that fit your real estate needs. If you have any thoughts of selling your home, we can help you get maximum results in today's market. Call us for a free consultation at 925-322-4300 or 925-708-0800. Thank you for your time, and we look forward to hearing from you soon.